Hi guys, welcome back. In today's video, we are going to be discussing about Timex Group India Limited. We'll be covering everything, the con call, not the con call, the PPT, the press release and everything, like the financial statement analysis. We'll also do a P2P with Ethos Limited and see, where does the company stand. Okay. Now first, let us understand the business model. Like what does Timex Group India Limited do? Okay. Now if you look at Timex Group India Limited, right, like in a simple way, if I have to explain it, it is basically a company that sells watches. Okay, that's it. That is as simple as it can get. Okay, but if you look at them, like earlier, if you look at the price point of these watches, it used to be somewhere between 5k or below 5k. You would see all these brands such as Casio, right? They used to sell that, and I think a lot of y'all would also know the Timex ka brand also, right? So they used to have this. Slowly what happened, they started venturing out into getting this mid-premium luxury brands. Okay, like when you talk about luxury brands, there are multiple levels to it. Obviously you have the top tier, when you talk about watches, you have top tier, like Bulgari and all of that, like Rado and everything, which where every watch, or the other thing, that Pratap Patik something, all the watches, which one single watch would cost you somewhere around 3 to 5 C. And then you have the mid ranges, where it ranges from 30 to 50. And then you have the ranges like Favre Luba, which ranges from like 2 to 5 lakhs, right? And then you have the mid premium, I would say the mid category, or I would say the bridge to luxury category, where the watches ranges somewhere between like 15 to 20k, or max to max 40k. So over the year, especially in the last year, they've really ventured out, into like pushing more towards this bridge to luxury category by by taking the licensing, to cater for the watches such as Guess, which is one of the brands, Guess brands, then Versace, I think Philip Lane, right? All of these collections, they have the license, to put up, to sell it under the Timex brand. They also have a website, called as Just Helios, through which they sell these watches. So this is the business model basically. Okay. Now, if you have to compare it with Ethos, the only difference between Timex and Ethos is the range of watches that they cater to. Okay. Like I told you, the maximum price point with Timex is probably like 40k, 50k. That's the max. That's like the highest premium watches you get, right? Versus when you look at Ethos ka starting price only is 1 lakh, right? Like that's like the minimum, like starting thing. Okay, and Ethos ka watches can even reach up to like 3 to 4C, like per watch we're talking about. If you look at the starting brand, I think the most cheapest is probably like something like a Favre Luba, which for Ethos, which starts like 2 lakhs or something, right, in that price point. So the only difference is Timex sells bridge to luxury, whereas Ethos sells ultra luxury. If you look at Timex, the price range category is somewhere between 3k to 8k for their brands such as Casio and Timex, and the licensed brands such as Guess and all, it ranges somewhere between 12 to 30k in that category. Versus if you look at Ethos, it starts from 1 lakh, 2 lakhs, and goes all the way up to even like crores for like one watch. Okay, so this is the business model. Now when you look at Timex ka number, you see, right, over the last, I would say the last 3 quarters, they've been really performing well, because in Q2 they clocked a really good 40%. Q3 was also like decent, I would say 30%. Now when you're talking about Q4, it's been the highest ever revenue, annual revenue they've ever clocked, right? So very fantastic set of numbers right off the bat. You see the sales on a Q4 on Q4 basis, if you see, sales grew by 46%, okay? 46. EBITDA grew by 35. And if you look at the PBT, profit before tax grew by 40. Pat grew by 30 on a Q4 on Q4, because if you see over there, on a Q4 on Q4 basis, one, there is a tax paid, higher tax both on the current tax as well as the deferred tax. I do not know why last year they did not pay the tax, no clue as to that. So because of this tax cutting, you'll see a little bit subdued in terms of, you might feel like there is no operating leverage. Okay, but if you compare the PBT with respect to the sales, it's hardly a miss in terms of operating leverage. If you talk about the full year, like FY24 versus FY25, you see that the sales has grown by 28%. And if you look at the PAT grew by a whooping 50% on a year-on-year basis. Okay, so really good set of operating leverage the company has been able to witness. This in spite of, you see that their expenses has also shot up. Okay, because if you look at the income statement, you will see that the employee benefit expense, right, that has really shot up. If I'm not wrong, on a Q4 on Q4 basis also, if you see, it's it's almost double. I think it was 7.4 crore in last Q4, and in this Q4 it was around 13 crores odd, in that range. The reason for employee benefit expense, shooting up is two reasons. One is unka, the amount of stores they're opening, that has increased. The second is, if you look at them, they have like a one-time incentive that you give, right? Like for the, for your employees. That is also one of the reason. Second is they're also investing more in terms of marketing. So that is also contributing to the other expense part in your income statement, which has made, little bit missed out on operating leverage on a Q4 on Q4 basis. But if you look at a year on year, very fabulous set of numbers, really, really great. Okay. And if you look at the every other parameter that is there, like for example, if you look at their brand Timex, okay. If you look at Timex on a Q4 on Q4, it grew by 44%. Okay. And if you look Guess, which is their licensed brand, like GUESS, Guess ka ek brand hai. These people sell watches of that Guess brand, that grew by 25% on a Q4 on Q4 basis. Okay. And if you look at Philip Plain, that grew, I think Philip Plain in ka base is very small, so that is why that was able to grow by 156%. And the value segment jo hai Timex ka, theek hai, which is like below 3K, 2K and all, that grew by 49%. So you see across categories, right? Like whether it is unka licensed brand, whether it is khud ka brand, everything has had a very solid double digit growth, right? Because when you talk about double digit, it can range somewhere between 20 to all the way to even 50. But if you see over here, it is literally in the range of 30 and above, like all of the categories that are there. Similarly, even if you compare FY24 versus FY25 also, the growth rate is similar. It's ranging between 27 to 40 across the brand, across the portfolio category. Now you might ask me, like, Prerna, like how did this growth come across? Okay, like this 28% growth on a year-on-year basis, and if you look at Q4 on Q4, it grew by 46%. Like how is it even possible, for them to grow? Because if you look at the business over here, see, remember in the investment checklist that we spoke about, the different parameters of the checklist. What are the three most important things for a business to grow? Especially if you are a B2C business, you need volume growth, you need value growth, and along with these two, if you're able to get a product mix change for the better, right, you hit a jackpot over here. And that is exactly what has happened with Timex. Okay. Now, when you talk about volume growth, how did the volume growth come? One is expansion not only through stores, but aggressive expansion in all other channels, right? Okay. Obviously, unka store is the number one category through which they push. But other than that, this time they've gone bonkers with respect to the, all kinds of trade channels such as e-commerce, they are there in Myntra, Amazon, right? Along with that, they've also entered Q-commerce with Swiggy, Instamart. And now soon also they're going to enter, they are in talks, they are in progress to enter into, like Blinkit and Zepto, all of these quick commerce also. So the volume growth came from channel distribution, massive expansion through your channels. That is one thing. Second, value growth. Value growth comes how? When you increase the price or when you cater, let's say to a higher priced product, that is the thing. If you look earlier, right, if you look at Timex as a brand, it was more catered towards aapka Timex ka watch. Timex ka watch is hardly between 3 to 5K. Max to max, it can range somewhere between 6 to 8K, right? That is the thing. But earlier, like I told you, right, now they're pushing more towards this licensed brand that are there, such as Guess, Philip Plain. Inka starting range here 15K. So earlier your average selling price could have probably been 4 to 5. Now if you're selling more Guess ka watches, more Philip Plain ka watches, your average selling price increases, right, from 4K to probably 15 to 16K, right, in that range. Since the push is more towards this mid premium or bridge to luxury kind of brands, because of this value growth has come. Okay. Now product mix change. How does product mix come? Like we told in the investment checklist workshop, there are two things: product mix changing for the good and product mix changing for the bad. When does product mix changing for the bad would have happened in case of Timex? Let's say the Guess ka watches, Versace, Philip Plains, everything, they didn't sell that and they pushed more towards Timex and Casio. But here kya hua? Ulta hua, right? Product mix change happened for good, right? The revenue contribution slowly has started to favor, Guess, Philip Plain, Versace, these kind of categories, right? So as a result, kya hua? And you also see, right, compared to Timex, because if you look at FY24 versus FY25, Timex grew by 27, okay? But if you look at Versace, it grew by 29. Guess ka collection, grew by 28. Philip Plain grew by 281% on a year-on-year basis. So it clearly shows ki like unka ye brand or this portfolios of brands that are there in terms of revenue contribution. Because of this, the product mix is changing. Now, obviously, obviously ना यहाँ पे demand अच्छा है, because people would see everybody's disposable income is rising, right? Earlier, when you compare to like probably even 10 to 5 years ago. So obviously, as your income rises, you would want to afford luxurious thing. You know, you would want to increase your lifestyle. You would want to upgrade it, and that is also showing over here. Product mix change has turned for the good. Okay. Now, if you get the investment checklist workshop, you would exactly be able to relate. You know, when you saw the press release, के like, you know, volume growth यहाँ पे इस तरफ हुआ, value growth इस तरफ हुआ, product mix change, you know, happened like this. So get the investment checklist workshop. You know, so next time when companies like Timex come, you know, you'll be able to just scan through it, you know, and you will be able to like, you know, understand what is happening with the company. Is it good or is it bad? Okay. I'll put the link both in the description box as well as in the pinned comment section. Okay. So that's that in terms of inka, like, you know, in terms of the business update that Timex has, you know, Timex has to give. Okay. Now, if you look at their balance sheet, if you look at their income statement, we covered the income statement, right? The major reason for operating leverage being a miss on a Q4 on Q4 basis is one is higher employee cost. Other expenses has risen a little bit due to the increase in advertisement cost. Okay. Those are the two reasons. Now, when you go to the balance sheet, there is not much because book value has increased by 3%. Asset liability mismatch to hai nahi. But if you look at the thing in the balance sheet, right, the inventories has risen, and that is that I understand that, because if you look at a company like Timex, right, and you've got so many distribution channels, you also don't know which category of watches is favorable for your customer. You do not know, right? And let's say if a customer is coming to your shop, you would have to keep a wide varieties of SKUs, right? Like that is the only way you win. So that is the reason for inventory to rise. Even if you look at the cash flows also, you will see at the end the net cash flow that is there after the working capital changes is negative. But if you look at the culprit in terms of working capital changes, the receivable has not increased by a huge amount. The payables has not increased by a like an amount where it's probably like a shocker to the investor or something. The huge rise is basically in inventories, right? And think about it, the business is such, right? Like for example, when you go to the shop, you want like not just Guess ka brand, you would want Guess, Versace, Timex, everything, a plethora of options for you as a customer to choose. Now, if you are growing at 45%, like in that kind of growth rate, high double digit, obviously now आपके inventories भी उसी rate से थोड़ा तो बढ़ेगा ही. So that is the thing. I do not see an issue over here. The issue will arise going forward if this inventory is not being sold. ठीक है? Backing up your inventory is completely okay, but the problem arises when this inventory is not getting converted into the sales in the upcoming financial year. ठीक है? And वो आपको कैसे पता चलेगा if this inventory is getting converted into sales or not? Tomorrow you will see that the pace of growth is coming down. Ultimately, everything gets connected to one thing, sales growth, right? Because why is the sales growth coming down? Because you didn't sell more of your products. Okay? That is it. That is the bottom line for everything. So track sales growth. That is the most imperative parameter. But to understand sales growth, you need to understand the business model. Okay? So that is the thing. Cash flows is clean. Everything is clean. Balance sheet, absolutely no problem. The result, to be very honest, is just fantastic. There is literally not one thing you can point out in the result and tell कि लगा इसने तो कुछ खराब किया है. ठीक है? The last thing is over here is the P factor. If you talk about it, if you talk about valuations. Now let's say for example, if I take 30% के like इसका profitability जो है it would grow at 30%. I'm being a very base case scenario because I think the business can grow at if they continue at this momentum, they should be able to grow in 30% even in FY26. And assuming the worst case scenario, they don't get any operating leverage, even the profit, let's say higher employee cost and everything, a lot of expenses are coming up in the balance sheet, lease liabilities increasing and all of it. इसके वजह से operating leverage नहीं मिला. And if I consider that on a full year basis, because FY25 का profitability, if you see, it's been 31 crore. So if I say 30% say the profitability rises even for FY26, then FY26 का full year का profitability would be somewhere around 40 crores. Okay, so divided by the current market cap that is there today, 1 year forward P somewhere lies in the range between 42 to 45. This is the worst case scenario I'm talking about. Obviously, if they grow the EPS, if they grow the profitability by even better rate, let's say they grow by 50%, 60% and so, then obviously the 1 year forward P will be even less, right? It would come in the range of 35 to 40. But why am I being conservative over here is this company does no con call. We do not know what to expect or what is the direction of the company going forward, what would be the direction of of the business going forward. So when such kind of cases present to myself, I do not like to be over bullish. I always like to take the worst case. I like to be optimistic that the business would go in the right direction. But when it comes to valuations and everything, I like to be pessimistic and and take that kind of that's how I do the analysis over here. Okay. So if you look, that's like a 40, like I told you, 40 to 45 ka 1 year forward PE for as of today. If you see, it's a 28, like full year में अगर आप देखते हो, full year का है almost 28 to 30% का growth engine. ठीक है. So it's not really even too expensive at the end of the day, not too cheap too. It's somewhere in the between, you can tell. Now if you have to compare it with Ethos, here is a very interesting play. ठीक है. Because if you compare with Ethos also, if you take like a 1 year forward PE similar range, you get it in the similar 1 year forward PE, 40 to 45. But Ethos is a 20% growth engine at 40 to 45 PE. Versus if you look at Timex is a 30% growth engine, somewhere between 30 to 40% growth engine at 40 to 45. So both of them, you're paying the same kind of earnings for both Ethos as well as Timex. But ek ka growth rate is higher compared to the other one. The other thing to note down over here, Ethos ka, if you look at it, the pace of growth has come down. Ethos was also 40% ka growth engine. Ethos went from a 40 to 20% ka growth engine, versus Timex went from a 20 to 40% का growth engine. Understand, ठीक है? एक ऊपर से नीचे आया, दूसरा जो है नीचे से ऊपर गया, ठीक है? Understand, this is very very important. If you do not understand pace of growth, then you can't do this over here, because valuation is not just about 1 year forward P and everything. Because as a company, if you need to get, if you want a stock to be multi-bagger, there are two things: P rating as well as EPS का growth. ठीक है? When you talk about P rating, how do you get P rating? You have to sustain the pace of growth that you've always maintained, or increase the pace of growth. And the second factor is what? You beat every single buddy in your space. Ethos earlier, if you see, it used to grow at 40-50% beat tha, ek time pe it grew. At the same time, there was no competition for Ethos. Now what happened? I mean, there was competition, there was Timex, but वो कुछ करता ही नहीं था. It is not even equal to be considered as competition. But in the last 1 year, game तो पलट गया completely. ठीक है? What happened? Ethos को growth rate कम होता गया, right? 30, 28. अभी in Q4 20. Like if you compare Q2, Q3, Q4 का numbers, if you see, it's been 22, 31 and 23% in this year, right, in Q4. Versus if you look at Timex, 40, 28 and now 46, Q2, Q3, Q4. So Ethos is coming down in terms of growth rate. Timex is going up and up. So you do understand यहाँ पे, ठीक है? एक का, one is maintaining its pace of growth and increasing at the same time. दूसरा, it is also beating Ethos in this space and it is moving up. So obviously यहाँ पे क्या होगा? Ethos पे और भी pressure आएगा, because one, Ethos का क्या हुआ? Pace of growth कम हुआ, and at the same time, now there is another competitor, your own competitor, who's doing way better than you. I think because if you look at the growth rate of Timex, 46 versus Ethos was 23, it's literally double the growth rate over here. So Ethos ka, it puts Ethos in a very terrible position, because you're already at what, like 60p. If I take the current P, it is a 60p at 20% growth engine. How will you get P rating at this? And now that you have a peer over here, और भी होगा. Now it's P का derating होना, it's possible over here. Ethos का P derating will start again, provided that I do not know what is going to happen in the con call is on May 14th. If they probably increase the store expansion, we'll have to see. Okay? But overall, good set of numbers from Timex, absolutely bomb. The only thing I would say, the only negative thing I would say is probably that these, I mean, I consider it as a negative. I mean, not really a big negative, but the fact that they don't do con call. Because what happens is, it's great that, Q4 ka result has been great. The last 3 quarters ka performance has been great. The full year performance has been great. But you do not also know what to expect. Because one thing over here, it's like shooting in the dark. Because you do not know if this pace of growth that is there, will it continue or not, right? Because the entire assumption of this PE calculation is like, that it would continue, right? So would it continue? What are the plans? How do they plan to go and everything, But yeah, if you look at the management commentary, you do not see any kind of negativeness. When I talk about management commentary, I'm talking about press release. They seem to be very confident in terms of business direction and business momentum. But that's that, okay? So overall, great set of numbers. Let's see what Ethos is doing today. Nothing. But anyways, great set of numbers from Timex, okay? And that's that. That's that about both the peer-to-peer with Ethos and Timex. I shall do another video today, and until then, see ya. Bye.